Here again, we also see the same principles apply to price charts from other markets outside the stock market. Earlier ideas can be seen. The large fib is at least 2 fib levels larger than the small fib. Areas where fib levels from the large and small fib are close to each other and line up with past reversal areas accurately identified future reversal zones. This is especially true for the areas marked in yellow. The price range marked in gray demonstrates a situation where price stalls or congests rather than completely and immediately reversing direction all the time. Price never moved 3 or more small fib levels after reversing to reach the gray zone. Thus, price still moved in a normal and healthy trend through the gray zone in early to mid 2017. It was never overextended by going past 3 or more fib levels. When the levels are redrawn to reflect developments in price, we can see the same characteristics again at different price zones. The upper range of both fibs lines up with the mid-1300s range, though the 1270s to 1280s still has fib levels from the large and small fibs lining up with past reversals. There is only price congestion rather than reversals. It was also broken through with large price movements in early 2018. Conversely, the 1240s now act as a reversal area, rather than stalling or congesting price as it had done on the previous chart.